Hello everyone. In this video, I'll be explaining to you the interim order that is issued by SEBI to Jane Street. And this order is regarding the Indian index manipulation strategies that Jane Street have, which they use to manipulate the market. So you must be trading for a long time in the market, and you must have observed that there are some sudden spikes in the market, and sometimes the premiums are not moving accordingly to the index. And you must have observed a little disturbance with respect to option premiums and option strategies. Like for the option expiries used to be very smooth before 2020, but after 2020 you must have observed a trend that the option expiry days are becoming very volatile. Like you cannot predict whether the market will close up or the market will close down, and this is the classical example of how Jane Street manipulated the market. There are two strategies about which SEBI is talking that Jane Street adopted to manipulate the market, and I'll be explaining you those strategies. So the name of the strategy is, first is intraday index manipulation strategy, and the second is extended marking the close strategy. And to give you the complete idea of the actions that happened and Jane Street took on the first strategy, that is intraday index manipulation strategy, CB has analyzed 17th of Jan 2024 day. Why this 17th of Jan 2024 day is very crucial? It is because Jane Street has earned 734 crore rupees with just one Bank Nifty expiry day. Like you can understand that this number is so huge. 734 crore is like it is a very big number, and this is the maximum profit Jane Street earned on a single trading day. And that's why it is so essential to understand what exactly happened on 17th Jan 2024. So this is a very important day for us. And SEBI has analyzed this complete day with a very minute details. So everything is covered here. Like whatever actions Jane Street took, we can completely analyze here. And this illustration is also provided by SEBI to us. So let's start and understand what exactly the strategy is about. And I want to assure you one thing, that even if you are new to the financial markets and listening these finance terms for the first time, I'll make this thing very easy for you. Like even you can understand what exactly happened in the market and what was the main logic of the strategy. So the strategy can be divided into two phases, phase 1 and phase 2. So phase 1 is from 9:15 to 11:45, and phase 2 is from 11:45 to the end of the market, that is 3:30. So in phase 1, what they did was they bought they were going long into the market. They were thinking that the market will move in the up direction. This is called bullish. So the market will be bullish. They were expecting market to be bullish in the phase 1. And in phase 2, what they did was they sold everything, whatever they bought. So I'll remove all the elements here, and we'll go step by step. What values do we have here? We have future of stocks, we have cash market, we have option net buy, we have future index, then we have profit, then we have index spot price, then we have delta exposures, and then cumulative profit, and then cumulative option net buy. And here we have time, and we are talking about 17th Jan 2024. So let's start with the price. Let us understand that how was the price moving on the 17th Jan 2024. So price was bearish, and it was already a gap down period. So each and everyone was expecting that the price will remain bearish only. But what happened? Jane Street bought the positions. Like you can see, they bought a very high quantity of stocks in cash market and futures in the futures market of Bank Nifty. So this indicate that they were bullish in the market, right? But what they did was they sold everything in the second part. Now, a very important question come to your mind is that they bought at a higher price and they sold at lower price. So they made a loss. And you're absolutely correct. They made a loss. They made a loss in cash market and futures market. And this is the strategy. The strategy is to use the money or the use cash market and future market positions to manipulate the market and earn from options. So you can see here, SEBI has also provided us the table. They made loss of 7,600 crores in futures and cash equivalent, but they made a 43,000 crore in total profit in options. So they made loss here. They made loss by buying high at then selling at a lower price. But what they did, and the magic starts from here. Before that, I will have to explain you what a call and what a put and the actions associated with it. Buying a call means that you are bullish. Similarly, selling a put means you are bullish. Selling a call means that you're bearish, and buying a put means that you're bearish. So buying a call means a right to buy, and buying a put means that it is a right to sell. Similarly, you can sell this right and you can buy this right. So these are some finance jargon that you need to know that are call and put. So what they did is they sold call. When they bought futures, they sold call. Now this is a very big flag. The big flag here is that when they are buying so many quantities of futures and cash market, means they are bearish, means they are bullish. They expect the price to go up. Then why are they selling call? Why are they betting that the market will go down? They are betting the market will go down because later they will be selling each and everything what they have bought. So the strategy is that the call premiums are very juicy. The call premiums are very high initially, and now they have manipulated and made the call premium extremely high. And now they are selling the call premiums later on, booking a very good profit. So the key here is to buy at a higher price calls and sell at a lower price calls. And this is the net PE buy. So what is PE? As I said, PE means the right to sell. The right to sell. And you can sell this right and you can also buy this right. So in this you can see that they bought the puts. They bought the puts initially. Buying a put means that you believe the market will fall. But again, there's a contradiction. In cash market and in future market, they have taken long position. They have taken positions which they believe that the market will move up. But in option, they have took position where they believe that the market will move down. And this is the action. You can see the orange bars are up here and orange bars are down here. So whatever puts they bought initially in the market, they sold all the puts later on. So they bought the put at higher price and then sold the put at lower price. And you can see the profit chart here. The profit chart has increased substantially after the phase one. Like in this phase one, the profit was 470 crores, and after that, it jumped, it was skyrocketed once they started selling in the market. And this is exactly how they make money. Now, the argument here is that these are delta neutral positions. But again, SEBI has countered that. SEBI has countered in this manner that delta neutral means when the equivalent of cash market futures and options are 1. But here it is not that. Here the equivalent is 1 is to 7, not 1 is to 1. So this is not an arbitrage here because the positions that they are taking in options is way more than the positions that they have taken in cash market and futures market. And one more thing is that cash market and future market are used to manipulate the market, to move the prices. To take trades, we take trades in the option market only. To move the prices, we use cash market and futures market because the interests of participants in cash market and future market is far less as compared to the interest of participants in option market. So option markets are generally used to take trades, but futures and cash market are used to move the markets in your direction. Now the strategy is very simple. Like I'll conclude the thing here. The strategy was artificially moving the prices, moving the prices by cash market and future market, and taking reverse trades in option market. And when they reach a favorable position, then directly dumping or directly closing each and everything. So whatever they bought earlier, they will sell that, creating a panic sell, and then they will close their option positions. So they will make a loss in cash market and future market, but then they will be compensated in a good manner in options. And this is how they earn money. Hi. So this is the second strategy. The second strategy is extended marking the close strategy. And for this strategy, SEBI has given 2 days. First on Nifty expiry on 15th May 2025 and Bank Nifty expiry 10th July 2024. So the context of this is extended marking the close strategy. Whenever you trade, you must have seen that the sudden spikes, sudden gamma spikes, gamma shoots that happen towards the close of the market. Like you must be seeing that you are taking trades and the trades are in profitable like till 2:30 and somehow something happens in the market then from 2:30 to 3:30 your stop losses are hit and you make a loss. And this is because of the extended marking the close strategy. So in this strategy, what they did is you can see the cumulative profit. The blue line is the cumulative profit. So the cumulative profit of Jane Street is very constant till 1:30, 2:30. And after that, they take heavy positions based on the direction on which they have bought and sold call and put. So this 15th of May is of Nifty. Here they have made the market move up. And here 10th July 2024 in Bank Nifty, they have moved market down. So you can see here, the market was very flat, like for more than half of the day. You can see like the opening and the closing here for this part is very, very flat. But after that, they took heavy long positions and moved the market in their direction based on the options that they bought and they earned substantially. Like the profit was or the loss was here like 60 crore loss and they closed at 160 crore profit just in like 1 hour. And this was the profit earned from the stop losses that were triggered uh, in your account. And in similarly, on 10th July 2024, the market was very flat. You can see the brown line here. The market was so flat till 2:30. And after 2:30, they sold, they aggressively sold all their position in cash market, in future index, as well as in future stocks. And the market fell. The market fell from like 52,400 to like market went to 52,200 in just a matter of like 15 to 20 minutes. And in this time, they earned a lot of money because of the aggressive selling that they did. So I completed both the strategies here. Strategy one, intraday index manipulation strategy, and the second strategy, extended marking the close strategy. So this was all about the complete glimpse of the SEBI interim report that was shared. Before concluding the video, I'd like to share something with you, and that is when you have money in your pocket, you can move the market in your direction. Like even if a small company or you and me try to do these things, we will not be able to do these things because this was the real money. These bar represents the real trades that were executed. And to make market moves, you need a large amount of capital. And that's why only Jane Street was able to do this. And just the HFTs and big firms are able to do these kind of stuffs and they are able to move prices in their direction. There's a very big difference between manipulation and arbitrage. And when you deal with such a large quantity, with such a large number of volumes. So this line becomes thinner and thinner and thinner because whenever you will put market orders, whenever you will put large orders, so you will definitely move the market. The arbitrage and manipulation line becomes more and more thin here. So SEBI says that this was a clear manipulation that Jane Street was doing. And Jane Street says that this is nothing as manipulation. This is just arbitrage that we are doing. But Jane Street deals with a lot of capital that moves the market. So what do you think? I want to ask you. Was this a manipulation or was this an arbitrage opportunity? If you have any more questions or would want to ask something, I would be more than happy to discuss about it. Thank you.